Good morning, everyone. It's about 2 minutes past 9 o'clock, so I guess we'll go ahead and get started this morning. Welcome to VC Ag Today this Thursday morning, June the 25th of 2020. We're pleased to announce this morning that we're joined by Mr. Robert Harper from the Virginia Farm Bureau Grains Division. Robert's going to be speaking with us this morning on making some market decisions based on the upcoming June USDA acreage report that will be released on the 30th of this month. And hopefully Robert will be able to provide some updates and maybe shed a little bit of light for producers as to what that report may look like, and maybe some anticipation as to what we can do to make better marketing plans and anticipate that report. So before we get started, just one or two quick housekeeping points. Everyone's been muted. We'll remove that security at the end of the meeting, so we ask everyone to please hold all of your questions or comments till the end of the presentation, and then we'll open it up for discussion and question and answer session there at the end. Other than that, if you have questions or comments, if you could post those in the chat box if you're joining us via computer or smartphone, we'd be glad to address those from the chat window as well. And if we have any links or additional supporting resources, we can also post that there as well. So without further ado, thank you for joining us this morning. And Robert, if you're with us, we'll go ahead and get started. Thank you for joining us.
Hey, good morning, Robbie. And good morning to everybody. It's a privilege to be able to have a conversation with all of y'all today, and really appreciate Cooperative Extension putting these meetings on every week. I know y'all have had a lot of success building community around these meetings, and I'm glad to be back on behalf of Virginia Farm Bureau. Very, very thankful. The hope for today is for me to make about 15 minutes of some comments here, and then maybe we can get some questions and discussion going in the route that you, the producers and extension agents, would like to see. But the idea is to just take a snapshot of where we are today. As Robbie said, June the 25th, and kind of my comments are coming from maybe 3 points of view and thinking about how do we, as marketers, reduce our exposure to downside price risk. You know, we always use the football analogy of offense and defense, and I definitely lean myself personally, and I know a lot of you here on the phone do as well. We lean to the defensive side of marketing, where we're constantly trying to protect ourselves from downside risk. And really the key here in 2020, where so much is unprecedented, so many influences on the price that are fundamental and technical, but so many influences on futures price and basis price that really don't have anything to do with fundamentals or technicals. It's more of a political type trade in so many ways. We really have to temper our expectations this year from a price perspective, and maybe a better way of saying that is being realistic in what we're trying to do with our marketing. And y'all are all good at that, and I appreciate that. But the first thing we got to think about and talk about futures price. We know we've got all these different groups of participants that trade futures on the Chicago Board of Trade. You and I care about that managed money speculator and what their opinion is, because that's the group, that's the participant that is betting on price direction. And they're betting on it big. And they do analytics as good and better than anybody, because they're putting their money where their mouth is. And really the most bullish influence for positive price action right now in the corn market is the managed money's short position. They are net short roughly 270,000 futures contracts. It's the second largest short position in history. So they're telling us loud and clear going into the June 30th planted acre report and quarterly stocks report that they think price is going lower before it's going higher. Now, can the managed money speculator be wrong? Absolutely, but we need to know what their opinion is. So they're short corn in a really big way. They're short soft wheat, about 30,000 futures contracts, so their opinion isn't so bold with wheat. And on the bean side of things, the managed money speculator is long about 20,000 contracts. So they're looking at the great domestic demand that we have for soybeans, the export demand that we have for soybeans, the less than anticipated acres this year for soybeans. All those things are kind of rolling into one, and there's still some premium in the futures price for weather, since August is the month that makes such a difference for beans. They're 20,000 futures contracts long beans, so they're telling us price is going higher before it goes lower. So keep that in mind. Corn spec money is short, wheat spec money is short, and bean spec money is long. When you talk about June the 25th, you still, even in 2020, we got to talk about the number one influence on price, and that's weather. And when you focus here, first off, on North America, the Corn Belt, we know we've got about, according to USDA, National Ag Statistics, about, 18 states raise about 95% of the corn and beans, with 4 of them really capping it off: Minnesota, Nebraska, Iowa, and Illinois. And when you look at the weather in those 18 states, or those 4 big ones there, the weather's been really, really good this growing season. And we don't have, in my opinion, really any weather premium in the corn futures price. We still have some in the soybean price, but not any in corn. The crop went in the ground really fast, both corn and beans. You all watch the crop progress reports. The extension agents here on the phone, they help turn the data in for those crop progress reports. It's still amazing to me. The American farmer can plant about 30 million acres in a 7-day period. It's just fathom that. Think about that for a little bit. But the crop went in as fast this year as it was slow going in last year. So kind of like the weather, where there's no normal anymore and everything just works to an average. That's what we've seen with planting progress from 2019 to 2020. So when the crop goes in the ground as fast as it did this year, we know we have big yield potential. And at least 2 of those top 4 states, Nebraska and Iowa and Minnesota, they're on tap today for having record yields for corn and beans. So there's very little stress in the Western Belt. The Eastern Belt has seen stress, but y'all seen the weather forecasts in the recent week. They got a lot of rain in Ohio, Indiana, Illinois in the last week. We're coming into pollination for a lot of the corn out there in the coming weeks. And if you look at the 10-day, whether you look at the GFS weather model or the European weather model, there's good temperatures and good rainfall predicted through pollination. So really interesting. And remember, the USDA puts out a drought monitor map every week. Y'all can look at that. It's great data. It's pictured very well also. If we can help you get access to that map, just call me, email me, or text me. So think about this. A typical summer rally is 20 to 40 cents a bushel. And I know we're just coming into the summer, but if you really look at our futures charts and take the nearby futures contract of July, we've seen, I was just doing the math on this morning, we've seen a 49-cent rally already on soybean futures since the bottom of the COVID restrictions. And we've seen a 23-cent a bushel rally on corn since the bottom of the COVID restrictions. So technically, we've gotten our 20 to 40 cent rally, even though we're just now into the summer. So we got to keep that in our mind, and kind of going back to 4 minutes ago and talking about tempering expectations. Remember, when we look at South American weather, and it's maybe hard to say this in one way, but it's true in the other, it's not as important this time of year. I mean, they're coming into their fall and winter. When you're looking at Brazil, their second crop corn is being harvested. When you're looking at Argentina, their second crop soybeans are being harvested. They're wrapping things up. They're planting wheat for the fall and winter. So weather's not as big of an impact down there now. And then remember, come September is when they'll get back to the field with their first crop plantings. So keep that in mind. And one thing to keep in mind about South America is that they're basically sold out of soybeans. When you look at the China numbers, China has imported a record amount of soybeans this spring, the majority of which have come from South America. So we know that China's been buying beans here in the U.S. And that's helping them keep up to some degree with this phase one trade deal, but it's also out of necessity because the Brazilian and the Argentinian farmer have basically sold their beans. We're going to see a lot of competition now coming from Brazil and Argentina on corn exports. When you look at the numbers, and the people who are in the export world tell me that corn from down there is now landing at many places around the world cheaper than U.S. corn. So we got to keep that in mind going forward here in this marketing year for corn. Talking about tariffs and trade, we got a real shock at the beginning of this trade week where we saw one of President Trump's trade advisors say in an interview that the phase one trade deal was basically off. We know that relations with us and China have weakened with what's going on in Hong Kong, what's happened on China's border with India. There's other things. But this trade advisor backtracked on what he said he was taken out of context. And we've had more information since Monday that the trade deal is still on. Even as late as last week, when Chinese officials met with American trade officials in Hawaii, China was fully committed to fulfilling the phase one trade agreement. They're behind schedule, but it's only June. They got 6 more months of the year to get it done, and we need them to buy what they said they were going to buy this year to support our futures price. So think about now, switching gears, how do we get a rally in the futures market? We know we can get a rally in price from the supply side, from production. We know we can get a rally from the demand side, whether it's domestic use or whether it's exports. And the way it looks today, and obviously everything can change in a heartbeat. Y'all taught me, and we all know we're only 21 days away from the worst drought we've ever been in. But sitting where we are today, looking at fundamentals from a North American production perspective, we got to say that if we get more of a rally, that 20 to 40 cent summer rally in futures price, it's going to have to come from the demand side of the equation. The supply side of the equation, as we've said, and as y'all know, the crop got planted fast. It's been under great growing conditions so far, and the weather models at least 10 days out are showing great conditions. So let's not look for a supply side rally this growing season. Obviously that can change, but that's where we are today. We need to see a demand side rally. And how are we going to get that? We're going to get that from China continuing to purchase and do what they say they're going to do. We're also going to get that when we back up to COVID. Remember, 2 words from COVID as far as affecting agriculture, and there are many more, but 2 words that I would say is demand destruction. Demand destruction. Remember, at the pinnacle of the COVID shutdowns, we had officially 60% of our ethanol plants offline. We know 1/3 of our domestic corn crop goes to ethanol production, and when you lose 60% of it, you know that's going to be devastating on price. The good news today, that this is great news, and we're all celebrating it. We're only off on our ethanol production 20%. So we rebounded 40% of that production that we lost. The numbers in the weekly EIA ethanol report yesterday showed we ground about 90 million bushels of corn last week for ethanol, and pre-COVID we were grinding about 110 million. So from that regard, we're just catching up wonderfully. When you also look at the demand destruction that came from supply chain breakups with restaurants, institutional food organizations not being deemed essential by governments during the shutdowns, we know what kind of ripple effects that put through those supply chains. We're seeing the backlog of cattle get worked through by processors. We're seeing the backlog of hogs get worked through. We're seeing less hogs and really now probably no hogs being euthanized. We're seeing milk not being dumped, eggs not being cracked. So we know demand is coming back, and we need to get that back fully in order to help with this demand side rally that we need. So think about something here. When we're looking at loss of demand, and let's talk about new crop futures for a second on corn and soybeans as you're looking at marketing. A lot of folks had price targets to start marketing new crop corn when December futures hit 350 and then sell again when December futures hit 365. We know today we're trading at 330, so we might want to revisit starting some new crop marketing before those price targets would fill at 350. On the soybean side, November beans, there's been a mini producer waiting for $9 on the November futures. We've got up into the 880 range. We've slipped back here before the report. Next Tuesday, we slipped back into the 865 to 870 range. So we might want to even think about looking at locking in some new crop beans here and not waiting for that additional 30 cents. And that takes us right into the last part of the comments here, I would say, and that's specifically speaking about the June 30th USDA planted acre report and quarterly stocks report. We all know, every week, every month, every quarter, the way the money flows into the futures market is different, but it is such a big deal every year for these speculators to flip the calendar from June to July. They're closing their books out for the month. They're closing their books out for the quarter. And money flow is going to be different in July than it was in June. The trade is going to be different. And this report, which I've always thought isn't a coincidence that it comes out on the last day of the month and the last day of the quarter, and it comes out why the futures markets are trading. It's obviously a big deal. Y'all told us in March you were going to plant 97 million acres of corn and that you were going to plant 83.5 million acres of beans. That was a pretty big shock as well. 97 million acres of corn would be near the all-time record. And normally we had gotten in a routine where y'all were planting 90 million acres of corn a year and 90 million acres of beans. So to see corn up at 97 was obviously problematic for price. So here's what, if you take the latest trade estimate for next Tuesday at noon, we're going to see the American farmer having planted 95.2 million acres of corn and 84.7 million acres of soybeans. Now, obviously, price action will be dependent on whether we see numbers come in above those or if they come in below those acre numbers. And I got something here I wanted to run through really quick, and just close your eyes if you're not driving and see if you can just picture this price action on June 30th, the last 5 years. And let's just take corn. So in 2015, when these acre numbers came out, corn went up 30 cents a bushel the day of the report. In 2016, corn went down 14 cents. In 2017, corn went up 12 cents on the day of the report. In 2018, a neutral report, no surprises, corn went up a penny. And then last year, when we got a surprise increase in acres, 2019, corn traded down 19 cents a bushel the day these acre numbers were released. So the trade is going to trade them. They'll come back after the 4th of July. They'll have full sights on North American weather from price action and full sights on exports. But the truth is about the acres that speculators do not like question marks. They can't determine what total production is going to be until they get an acre number, and they can't determine what the carryout or the leftover bushels are going to be until they get total production. So these numbers that we're going to get on Tuesday for acres basically sets the tone for the rest of this year on how these futures are going to trade. So I'll repeat them again. The expectation is you said you were going to plant 97 million acres of corn. The expectation is going to come in at 95.2. You said you were going to plant 83.5 million acres of beans, and the expectation is going to come in at 84.7 million. Okay, so switching a gear here again, what about quarterly stocks? We're going to see that Tuesday as well. That's what was in the bin on June the 1st. We're looking for an expectation of 980 million bushels of wheat. That would be down slightly from 2019. Corn, we're looking at 4.9 billion bushels in the bin. That would also be down slightly from 2019, and we'll come back to that in just a second. And soybeans, we're looking at 1.3 billion bushels in the bin as of June the 1st. That would also be down from 2019. So we want to see the stock numbers lower. That's positive for price, and hopefully if they can come in lower than what the estimates are that I just read, would be great for price action in a positive way on Tuesday. The spooky thing, and where surprise might come in on Tuesday, is in the corn number, the expected 4.9 billion bushels in the bin. We know corn use for ethanol has been off dramatically, to put it mildly, like nothing ever seen before, since March when the ethanol plant started closing. If we get a big shock and surprise in the quarterly stocks report on Tuesday, I think it's going to come in the stocks number for corn, and that number being higher than 5 billion bushels in the bin. So keep your eye on that as well. And closing here with some marketing. Remember, look at the bushels that you know you have to move. I'm talking new crop. The bushels that you know you have to move this harvest, whether you're moving them because of storage reasons or because of cash flow. Those are the bushels you want to focus on. And remember, when we're talking about tempering expectations, we're talking about managing downside risk, playing defense. Let's look at pricing some of those bushels before the report comes out on Tuesday. If you have access to storage, you can also look at playing defense by pricing 2020 corn or 2020 bean production in deferred month. As y'all know, there's a lot of carry in the corn board, for instance. December corn is at 330. July corn is at 354. We could sell 2020 corn in deferred months and capture that carry and still help put a floor under your average price for next year. So keep your eye on those carries and focus your attention today and tomorrow and Monday as you're thinking about making new crop sales decisions before this report comes out. Focus your attention on those bushels that you have to move at harvest, or if you're fortunate enough to have storage, focus it on selling some cash bushels in a deferred month. If you have old crop bushels in the bin, which I know a lot of us do, we need to think seriously about pricing some of those bushels before the report comes out as well. Same if you've got basis contracts. We either got to roll or to price those July futures by Monday, and maybe some questions will come up here now, and we can talk about that specifically. But those are all the, prepared comments I had, and I'd be glad to help with some discussion or try to answer any questions y'all might have. And appreciate y'all's attention.
Thank you, Robert. We really appreciate you joining us this morning and sharing that great update on the market, and hopefully giving some light as to maybe what we can expect here coming up next week. So thank you so much for joining us on that. I was just checking. I don't see any comments or questions in the chat box, so I guess we'll just go ahead and open it up for discussion this morning. So I'm going to go in and just make some changes here so you all have the ability to unmute yourselves. So that change has been made now. So if you're with us this morning, if you got a question or a comment for Robert, we'll go ahead and take those now.
Hey, Robert, Mike Broadus, how you doing?
Hey, Mike, good morning. Yes, sir.
Robert, I get daily emails, or rather texts, from Old Dominion Grain. And it peaked. I'm looking forward. Corn peaked at 350 on Friday, June the 12th, which was 13 days ago. Since then, it's been falling very steadily. What is this a sign for something? What does that tell you?
Yeah, you're probably are you looking at the December futures contract, Mike? Is that what you're talking about?
No.
New crop corn?
No, it's new crop corn, but it's September futures.
Mm-hmm. Okay. So yeah, a great question about futures charts and technicals. So when we're looking at a futures chart, and obviously people think in terms of nickels, and a lot of times we get technical resistance at nickel breaks, whether it's 340, 345, or 350. A lot of producers have open orders in with brokers or wish orders in with buyers, like you mentioned, Old Dominion Grain at those 5-cent breaks. And we do get a lot of resistance when futures contracts or cash prices, whether you might be taking a 345 futures price and a 5 over basis, making a 350 delivered price, we do have a lot of resistance at those levels. And when we can see pullback, whether it's pullback from a buyer or pullback from a speculator, when we get to those. The problem with corn, remember, that's holding corn back is, number one, the American farmers saying they were going to plant a near record acreage of 97 million. And the expectation is that because of some prevented plant acres in North Dakota and because of some farmers switching acres to beans, that we're not going to see 97 million, we're going to see 95 million. That weighs heavy on the futures price. Remember, the planted corn acres last year in the U.S. were 89 million. And even if we come in at 95 million this year, if we get a trend line yield, that puts us on par for a 15 billion bushel corn crop when we're used to growing 13 billion bushels. And that's just heavy headwinds or negative pressure on the corn price. So I think that's what we're seeing. Great question about kind of hitting that ceiling there around 350 for September delivered corn off the December futures contract. It's just a headwind there because of demand destruction from COVID and because of the farmers saying they're wanting to plant so many acres. And I'll close on that question by just saying too, when you look at a lot of these productivity indexes that are computer driven models that factor in planting date, genetics in the seed, weather, one of the models currently has the average corn yield today at 179 bushels per acre. That would be a record. And if we get a near record acreage and a near record yield, obviously that's going to be really devastating for price going forward. And that's the thinking, and you're thinking about it too, locking in some new crop corn here before this report. Because if you look at one side of the coin, if y'all do plant a record acres, if we do get above a trend line yield, if 20% of the ethanol plants stay offline, if China doesn't buy corn, sorghum, or ethanol in the biggest way we've ever seen, price is going to be lower for corn at harvest than it is right now. Am I making any sense saying it like that?
Yes, sir. Yes, sir. I follow you completely.
Mm-hmm. So I got a question. Where does that leave you as a producer in your thinking about looking at cost of production and average yield and how that works out to a break even? Does that make you want to lock some in before Tuesday or go out past it? I wonder.
I'm being regretful now that I could have sold some for 350 and I didn't.
Mm-hmm.
I think it's going to. I'm scared to death that come Tuesday, we're going to get some news that's going to make it drop hard. I'm scared.
Mm-hmm.
Of course, that's speculation.
Yeah.
All right. Any other questions or comments for Robert this morning? All right. Well, Robert, I thank you again for all your time this morning. I think you covered a lot of ground, hopefully answered a lot of people's questions, maybe give them at least something else to think about. So I know we're all anticipating the report coming up next week. So we'll try to remain optimistic and hopefully things will be okay, but certainly something to consider, as Mike was saying. So thank you again, Robert. We really appreciate you joining us this morning. Thank you for your time, and we appreciate you in Virginia Farm Bureau. One other quick, go ahead, Robert.
No, I was just going to say thank you. And anytime that I can help, or Josie Moore, my counterpart at Farm Bureau in the grain division, just give us a call. And glad to let people know too, if they don't, Virginia Farm Bureau has a blog called Plows and Politics, and Josie and I do a video that we turn out by 4:30 on Friday afternoons that just kind of does a market recap for the week. And if you just go to a search engine and put in Virginia Farm Bureau Plows and Politics, it's called the Merchandiser Minute, and you'll see it around 4:30 on Friday afternoons.
All right. Thanks, Robert. We really appreciate that. So if you're interested in taking a look at that, Robert has given you the information where to find that. So, or you can contact Robert to get those links. So thanks, Robert. We just appreciate everybody joining us this morning. A few closing remarks I'd like to make. One, if you have not had a chance in the past, or we ask that you please take a few minutes to complete a brief survey that we ask folks to do. It's an evaluation to help us hopefully improve these programs, and also give you an opportunity as participants, if there's a topic in mind that you really would like to see featured, or would like us to do a section on, we'd be happy to hear that feedback. So you see the link there in the chat box of where that can be found. But also we're trying to send that out and post it with the recordings as well. So the recording of Robert's presentation today will be found at the link you see there on your screen on our YouTube page that we've got. And we also have audio only files for the recordings on the Westmoreland County, Virginia Cooperative Extension page. Next week, our speaker will be Thursday, July the 2nd. We're hopeful to have Dr. Michael Flesner back to speak with us on weed management throughout the summer, primarily in our soybean crop, and also touch base on some of the over-the-top dicamba court rulings that occurred earlier in the month, and just provide some feedback as well as some alternative options for other seed trait and herbicide chemistry packages that producers may be able to look at in the future. So if you can, we invite you to join us for that next Thursday morning, same time here on VC Ag Today, and share that with folks that you feel may benefit from that section. So thank you again to everybody for joining us. Just like to take a quick second and thank the team of agents that make this effort possible. Laura Maxine and her summer intern, Shelley Underwood in Hanover County, Mike Broadus in Caroline and King George counties, Trent Jones in Northumberland and Lancaster County, and Stephanie Romelchek and her summer intern, Skylar Swan in Westmoreland County. So thank you all for all of your help making these efforts possible, and we thank you all for joining us this morning, and hope everyone has a great rest of their Thursday afternoon. Stay safe, and hope everyone does well, and hopefully we'll all fare well through the report next week. So Robert, thank you again for all your time this morning. We really appreciate you joining us.
Yes, sir. You're welcome.
Thanks. Take care, everyone.